Hey there. I'm Demitri, and I have this video, and what you're going to learn in this video is the top 10 critical things that you need to know to succeed at buying a house. So if you are thinking about buying a house, whether like today, next week, next year, if you're thinking about it, here's 10 things that you need to know so that you can succeed at buying a house, especially when working with the Demitri team. Let's jump into it. So one of the questions now, right now it's what is this? This is July 2023 as I'm recording this one. I'll do updates to it because the market always changes. So the first question is now the time to buy? So we're going to talk about that. It's now the time to buy. July 2023. There's a lot of mixed information. The next thing is, how do you get the house that you want? There's limited inventory for one thing. A lot of the houses are nasty. So how do you get the house that you actually want without wasting lots of time, going through a lot of stuff? We're going to talk about that. Financing. What are your options for financing? How do you make that palatable? Obviously, interest rates have been going up. We're just talking about them going up. So we're going to talk about that. Incentives. What kind of incentives can you get? There are quite a few different types of incentives. The next thing is a lot of people don't take into account in their purchase is the cost of insurance. Every house is different. Some houses are going to be astronomical for insurance, and some houses are going to be extremely affordable for insurance. So it's being able to weigh that into your process of buying the house. Next thing is, do you buy a move-in ready house or a project? Most people want move-in ready. They're afraid of projects. We're going to talk a little bit about that. The next one is HOAs or not. Do you buy in a community that has an HOA or not? We're going to talk about that a little bit. And anything that you buy, there's always worry about what's wrong with it, what's going on, what kind of future expenses. So inspections are something we're going to talk about there that kind of lets you understand what you're buying. The next thing is, which kind of goes along with how do I get the house that I want? Well, we have a program called Perfect Home Finder. So we're going to talk about that a little bit as well. And then a timeline checklist. Like, are you actually ready? Is now the time? Because it might be now is the time because of the market, but is now the time for you in where you are in your life and what's going on? So let's talk a little bit about that as well. All right, let's start with the first one. Is now the time to buy? This has to do with the market. So in our market right now, man, you can go search Google and you can find a reason to buy. You can find a reason not to buy. There is no precise or concise articles or information about what's going on in the market. What is definitely going on in the market is the number of houses for sale has definitely reduced, but so has the number of buyers in our buyer pool. So if my inventory went down 10%, well, the number of buyers dropped 10, 15, maybe 20%. So it's kind of in parity because of the number of buyers versus the number of houses. So we're still seeing action happen. It's still relatively normal from that standpoint. Pricing is one of the issues of where we're at. The next thing is in our economy. What's going to happen? Are we going to pop into a recession? Are house prices going to drastically drop? Almost everything that you see that is reported to you is reported based on national averages, and very rarely give it to you by a state average. And even if they did that, in our market, that wouldn't matter because we're in Palm Beach County. You may be seeing this because of St. Lucie County, Broward County, Miami-Dade County, could be Okeechobee County. But in that area, if we're looking at southeast Florida, that area, we could even start from Orlando and come down. Even from there, that is a whole different marketplace because it's desirable. People want to be here regardless of what's going on with the economy. They really don't care. So they come and they pay somewhat of a premium for it, even though I'm going to tell you that you're not, from a seller standpoint, I'm going to tell them you're not going to get premium dollars. You've got to get reasonable dollars, and there's a whole different reason for that. So we've got to look at is now the time to buy. Let's take a look at your life situation, right? If you're renting, now is definitely the time to buy. Get out of renting. There is never a win in renting. Never, never, never. If we were to take an economic model and we looked at the cash that you had to be able to buy, and if you were to set that aside and say, well, let me just take that down payment and I'll do some investment on that, I'll do the rental, it should be a little bit less a month than what my mortgage would be. In a 3 to 5 year time range, you will see that a house eclipses what your rental is. Gosh, $50,000 typically, sometimes $100,000. One of the primary reasons is that house values appreciate at least 4%. So if you've got a house and you bought it, I'm just going to use easy numbers, 200,000. Let's just say it's a 3% appreciation. So first year it went up 6, next year it went up 12,000 above, next year 18,000 above, and so on. And they're actually a little bit more because obviously that 2% has to include with the 6 there and the 12 and so on. So by the fifth year, you have you have an amount of equity in the home that you're never going to get in an investment. And if you were to try to invest that money, even right now with a little bit higher interest rates, you might get 3, 4, 5% on that money, but you're getting that 3, 4, 5% on the down payment. So if you had $20,000, you get 3, 4, 5% on $20,000, as opposed to 3% on $200,000. So you're actually getting appreciation on money you borrowed. Okay, so now is definitely the time to buy if you're renting. If you are in a house right now and you've got a low interest rate on that, well, we got to look at your life situation. I would tell you that this is, you probably have, depending on when you bought it, you probably have the most equity you're ever going to have in the house. So now is actually a time to sell your house and look at buying the next house, because you're going to preserve that equity. Is simply going to go down over the next several years, on what you've got in your house. All right, let's take a look at the next thing. Getting the house that you want. Well, one of the first things for getting the house you want, you got to be clear about what do you want for a house. Do you want a 1-story? Is a 2-story acceptable? Basically stairs. You got to think about your age. You might be young and stairs don't matter. You might be kind of middle age. You ought to be starting thinking about stairs, because 5, 10 years into it, well, now you're like, well, my hip hurts me, my knee hurts me. Going up and down the stairs is really a physical problem for me. So we need to think about, what do you need for a house? Do you have to have a garage? Do you need a yard? Do you have a pet? Do you need a fenced-in yard? What are you doing for maintenance? Meaning, landscaping, cutting grass. Do you have to have a pool? Would you rather be in a community that has a pool? So all of these things you've got to consider, what you have to have in a house, so that as we are looking for a house, we find the house that is worth you buying, that really makes you, happy and excited. Storage is one of the things people consider. Do you have a storage unit right now? If you have a storage unit right now, well, part of the money you're paying on that storage unit can be rolled into your mortgage money that you're paying. So if you're paying $200-300 a month for a storage unit, well, think about the fact, when you buy a house, make sure you get a garage that all the stuff in the storage unit can go in there, because that money you're paying on the storage unit can be converted into money that allows you to afford a mortgage. All right, so that's that one. Let's talk about the next thing, financing. All right, so financing, obviously you're going to go get a loan. In the financing, a couple of things to realize is there are rate buy downs. There's actually an amount of money you can pay it. The seller can pay it. As an agent, I can pay part of that. It could be an incentive to get you into a mortgage. Even the mortgage company can pay it, because there's mortgage companies out here that they're desperate for deals. They're not getting the business they used to get. So they may actually say, well, you know what, we'll pay X amount and we'll buy your rate down half a percent. There are new construction that is buying the rate down 2%. So you'll be able to walk into a 5% mortgage because the builder says, I'm going to buy that rate down as an incentive for the financing, so people will go ahead and buy. The next thing is refi. So in reality, our interest rates are going up and down, up and down. The Fed has basically said they want to get inflation under control. They still haven't gotten under control. It's getting closer. They're going to keep raising the rates. But once inflation gets under control, the interest rates are going to start dropping. And interest rates, just so you understand, interest rates are what, a lot of times you look at it, they say the interest rates. Well, the Fed isn't raising the interest rate to you. What the Fed is raising is the interest rate that the central bank charges for banks to borrow money. And banks use that money to go out and do lending, and then they turn around and they make money off of that lending. Typically, they were keeping the spread, meaning if it cost them 3%, they were adding a percent, maybe 1.5%. Right now, they're adding as much as 3% on top of that, and you'll see some banks that's how they're able to do this rate, buy down. They call it the buy down, but for them, instead of getting a 3% spread, they're getting a 1.5% spread, for instance. But they also know that in the future, and I'm talking about 2, 3, 4, 5 years at most in the future, we're going to be at a place where interest rates are going to come down. National historic average. Now, this is like, if we were to look, I think it's 30 years. If we were to look over 30 years where interest rates have gone up and down, up and down, up and down, 5.5% has been like the historic average of where interest rates have fallen. They've gone above it, below it, above it, below it, but they've always kind of settled in to that 5.5%. So a refi lock-in says, hey, if I'm going to get a mortgage, maybe what I need to do is find a mortgage company that is going to offer a refi lock-in, meaning if in 2, 3, 4, 5 years at the most, if the rates came down and you wanted to refi your house, that they're guaranteeing a streamlined version, but 2, minimal cost. So when you're going to get your financing, you've got fees that you're paying for the bank to do all their paperwork, to do all the things to generate your loan. So being able to get that where they would say, well, we would refinance you for $500. So now it is virtually, cheap. I will say it's a no-brainer. It's like, okay, I can drop my interest rate, 1%, 2%. And at the time that you refinance, if it's only going to actually add to your, to your balance, because at the time you go to refinance, let's say it's a $200,000 house, it was 2 years later, that balance is probably, $170,000 because you had a down payment that you put, plus there's money that you've been paying towards, the principal over those 2 years, then it might be $170,000. So you're going to refinance $170,000. They're going to charge you a fee. They're going to roll that into the financing. So let's say it was $1,000. So now you got $1,000, that's added to that, as opposed to $3,000, $5,000, $6,000, $8,000. Sometimes refinances cost that much. So you really got to look at, does it make sense to refinance based on where I'm at? To drop my payment, because I'm also increasing my balance. And if I'm going to keep the house only another year, that difference might not make any sense. But I can certainly help you with those calculations in the future. All right, that's financing. Let's talk about the next thing, incentives. All right, so you can get incentives, and there's different rules for incentives. So you can get seller credit, meaning the seller can give you a credit. They can give you a credit for repairs. They can give you a credit for closing costs. They can buy a rate down, like we just talked about in financing. Now, those credits are going to be different based on what they're allowed to give is going to be based on the type of loan that you get. An FHA loan would be one, is going to allow a certain amount of credit. A VA loan is going to allow a different type. Traditional loan, different. And different lenders may change those incentive rules a little bit, but it's good to know what incentives or what money you can ask for from the seller or from other parties that are involved in your purchase of your house to help get you into the house. There are programs out here. If you're a first-time home buyer, there are programs that get you grant money. Some of them are free, meaning that you live in the house 5 to 7 years. That money is basically forgiven. You might get $10,000, $15,000 for that, and then if you've lived in it for that amount of time. After that, if you sell it, you don't have to pay it back. Let's say you lived in there 3 years and they said you had to be here 5. They're going to prorate some of that. You have to pay some of that money back. There's a second thing besides first-time home buyers, which is part of having to be a first-time home buyer, but it's called Hometown Heroes. This is a Florida thing. You can get up to $30,000 of grant money for that, for closing and down payment money. It's open to everybody. It used to be only open to first responders and healthcare professionals, but it is now open to everybody to get that done. You just have to be a first-time home buyer. New construction, as I mentioned, they've got incentives that they're doing. So we can explore all of those things as well to find you the best opportunity. And like I said, it's a mixture of defining, but it's the house that you really need. And it's not like the house. It's like, what are the criteria about the house so we can find that house, and then what is the criteria about the lending or the other thing from your financial situation that we can get you the best opportunity to get into a house at the least amount of money for the best value basically out of your pocket. All right, insurance. All right, insurance, as I mentioned earlier, can be drastically different based on a particular house. A brand new house is going to probably be the cheapest insurance out there because it's already going to have the latest and greatest in hurricane protection, and that's the biggest thing that insurance does. Whenever you buy a house, you're going to get a 4-point inspection, and that is going to look at all of the things and tell the insurance company what their risks are. One common thing is, are there 3 nails in the roof truss? All right. A lot of homes don't have those 3 nails. Do you have impact windows, or do you have shutters? Or are the entrances or all of the openings of your house, are they protected from the hurricane? How old is the roof? Those are all things that make a difference to floodplain. Where are you? Can you get flooded? How close are you? Sometimes it's geographically where you are. Sometimes being east of 95 is more expensive than west of 95. So we can look at those items as well. So again, it goes into the plan of you buying a house to have the best situation for purchasing the house and in your, economic impact to you. All right, move-in ready or project. Most people don't want a project. They want move-in ready. Quite honestly, I would tell you that it's got to be a pretty bad project for me to tell anybody that they shouldn't buy it. Only a seasoned person that's done, a bunch of repairs. But, if we're talking about a kitchen update, a bathroom update, putting in some flooring, like taking the carpet out, or maybe the tile sucks and you much rather have vinyl flooring or hardwood flooring, or, something like that. Those are all easy things to be done. They're easy to get contractors already lined up before you even purchase, or even you purchase and then in your due diligence part, we get the flooring contractor, the kitchen contractor, the electrician, all the people that are there so they can give you the prices of what they are. Then we can negotiate how that money comes. Most people don't have the money to pay for that project because they're putting the money into the financing, and that project money comes basically out of their pocket. There are many ways to get that done where that project money is not coming out of your pocket. It's actually rolled into the financing. It just takes a creative person on knowing how to write the contract, how to work with the parties so that all of that happens. So that is something, and it certainly is a value that I look at myself and my team bring to you, and why you should consider working with us. Next thing, HOA or no HOA. Now, I will tell you that personally, I hate being in an HOA, but I actually own a property that's in an HOA, and quite honestly, when I look to actually retire, that's where I want to live. One of the reasons is because the HOA is affordable, and the second is because it offers a whole lot. One of the big things it offers to us is insurance. So the HOA itself covers all of the insurance for the property, and the only thing I got to worry about is what's the contents. If it were to burn down, blow away in a hurricane, whatever, all I have to worry about is what did my furniture cost, my furniture, my clothes. That's about it. So that's an easy thing. It offers me a lot of amenities, where a lot of times an HOA will provide cable, internet, water, trash pickup. They'll do landscaping. So it's a lot of stuff that you don't have to worry about anymore. So is it worth that? Because quite honestly, if you were going to do it, it's either your time or your money that's going to take care of those things. And if you were to look at, internet and basic cable, landscaping, just those things, let's just take those things. You probably have $200-300 a month just in that. You throw insurance, you probably got $300 a month in that. If your HOA, like in the one I was telling you about, I paid $375 a month, and it includes all of those things. And we've got a big clubhouse and 2 community pools. I've got the tennis courts. It's, great grounds. They're all landscaped, all of that. I can't buy that on my own to, and basically duplicate those services for less money. In fact, if I duplicated those services, probably 2 or 3 times that amount of money out of my pocket. So that's what you got to weigh is whether whether it's worth it or not. Now, there are some HOAs that I've sold houses in that I just shake my head and say this is not a place to go because the HOA is just so expensive. But those are things we're going to look at in determining, hey, is this really the right place? So don't think that it doesn't, that buying in an HOA is terrible. There are good HOAs to buy in, and then there are bad HOAs to buy in, and we will mix that into your decision for buying a house. All right, next thing, what we're going to talk about. Oh, I told you, Perfect Home Finder. That is an exclusive program that I have. And what does that mean? Well, what that means is after we've defined what you're looking for in a home and defining, we can match that up to areas as well. That we can go, okay, well, we want this type of house. We now know areas to go to. And we actually do a lot of what we call target marketing, where we reach out to sellers and we find out, hey, listen, I've got a buyer, they're ready to buy. They would like a house like yours. We see if they might be interested in selling, and if so, then we go preview the house first, make sure that it actually fits all that criteria, and then if it does, then we have you come look at it. And if it does match, you like it, you want to put an offer on it, you're the first one, because it's not listed. It's not on the MLS, it's not on Zillow, nobody else knows about it. Typically, we're getting that house at a price better than what you would have got had it been on the MLS, and you're getting it in a time frame, meaning that we can schedule the time frame that works both for you and the seller. So let's say you had a situation and said, look, I'd love to buy that house, but I need 2 months to get out of the house that I'm at. Maybe you're moving from another city to this one. And the seller, same thing. They need a place, some time to get theirs. We can work that out, but get the house under contract. And like I said, you get first crack at buying, so you really don't have any competition. Everything is much easier to do that. In fact, I think it's a better way to do real estate than it is to worry about, rushing out here what's on MLS, because most of the time that stuff is just insane. All right, next thing, your timeline checklist. So here's some things. Are you actually ready? So one thing we want to know, how's your credit? Do you have some bills we need to pay off? One of the things is, do you have a car loan? Do you need a new car? So for instance, you need a new car, don't buy a house right now, or don't buy the car. Because if you buy a car right now, that's going to affect your credit and probably cut you out of what you could buy for a house. So you're better off sticking with and just repairing the car that you got, buy your house, and then worry about buying a car after you buy the house. Do you have some bills that we can cut down? Can you get your credit card debt down? So most of the time your credit gets hurt if your credit card debt is more than 50% of the available credit. So let's say your credit card has a $10,000 limit. If you've got more than $5,000 charged on that card, it's going to hurt your credit. Your credit might go down 60 points just because of that. Drop that down to 3,500, 4,000, you're going to see your credit come up. It's not going to, it's still going to hurt you, but in a lot less dramatic fashion. The higher your balance is, or the closer your balance is to available credit, the more it's going to hurt your credit. So you want to be working on getting those down. Do you need to sell your house so that we can be prepared on selling your house? I do not suggest if we're going to find you a house, let's not sell your house yet. Let's just be prepared so we know kind of what we think it's going to take to get your house sold, so that we can then go find you a house. And then once we find you a house and get that under contract, then we sell your house, because we got an idea of what it's going to take in the timeline. And anytime we go to sell a house, our goal is to have it sold under contract within 30 days. So that's the strategy that we take to make that happen. So that is, that's the piece there. All right, the last thing is our buyer loyalty agreement. All right, so let me tell you about our buyer loyalty agreement. So we do a lot of work for you. Especially if we're going to do the Perfect Home Finder, the marketing that we're going to put out. What we ask everybody that we work with as a buyer, we ask you to sign a buyer loyalty agreement. That basically says you agree to work with us exclusively in a defined market. So let's say that we said Palm Beach County. That's a big market. Maybe you want to limit us to a certain city, certain area. We're fine with that. Because that's where we will concentrate and focus, and we'll do all our work within that area. And what that means is when you buy a house in that area, if it's a house that we have brought to you, house you found, you might have been on Zillow and found a house, and you said, hey, I want to look at that. You agree that we are your agent. We're going to get paid. As you probably realize, sellers, as part of their listing agreement, they're paying a buyer's agent for that. We're going to get paid out of that contract because we are the agent you're working with. We're going to do everything to get you, prepared for being able to buy. We're going to be able to get you educated on that. We're going to make sure everything goes smoothly and that you are protected and got the best deal you could ever get in doing that. And for that, what we ask in return is your loyalty. You come up 2 months later and you go, hey, this isn't working out, fire us. Just tell us, hey, we want to get out, and fine, no problem, we'll get out of the loyalty agreement. But that tells us, instead of people just kind of going off and doing something and then buying with somebody else, where we're still working hard to find you a house, it lets us know whether we need to keep working with you or not working with you. So we're looking for that, kind of honest, easy transaction and information, between us. And that, obviously we are professionals. This is how we make our income, and we're looking to get paid for the effort that we have put out to get you a house that you want, that is perfect and desirable. All right, I hope this information has helped you. That's given you a great idea of, like all of the things you need to know as a buyer. There's probably more things that I'm sure we would come up with. Actually, something I don't think we covered was inspections. Yeah, let's go back to that. Let me just jump into that one real quick. Inspections. So most of the time you go to buy a house, first thing happens, you get an inspector to come and buy the house. It's a great start. I personally think that sucks. I think that's the worst option of all. It's the cheapest option, and that's why people do it. But if you've ever bought a house in the past and you've ever had it inspected, you will see the inspector comes out. They work really diligently to try to find all the little things that are wrong with the house. But in everything that they tell you about the house, they say, you need to go to here's this issue, and you need to check a professional on whether this is good, bad, right, or wrong, right? They don't take any responsibility of telling you. They'll say, well, the AC is this, or the roof is that. But they don't take any responsibility. They give you estimates. They do all this. I look at it, it's not the way to go. The way to go is that we get an actual AC contractor who comes out and looks at it. They do a tune-up, $79. They do a tune-up. Sometimes you get a little bit cheaper. They do a tune-up on the AC. They tell you exactly where it is, but not only do they tell you exactly what the condition of the AC is, they actually tell you if it needs to be repaired. They give you a quote. You now know exactly, not an estimate from an inspector who's not going to do the work. You get an actual quote that says, look, the AC is shot, the interior unit needs to be done, the outside unit is pretty good, we can do this for $2,200. All right, well, now you know exactly. You actually have something to work with, and you have the company who can actually do the work. Second thing is, and the same thing is true, I used AC as a thing, but the same thing is true for your roof, the hot water heater, septic, plumbing. Plumbing is one to do, and actually I put hot water heater and plumbing in there, but they're really the same, because the plumber is going to do the hot water heater. There's a different group that does septic, because you actually have a septic and then you have a drain field, and somebody's got to come out and look at that. Your electrician, we bring an electrician out there, they take a look at that. If the panel has a problem, they can tell you exactly what it's going to cost to replace that panel. They can tell you why it needs to be replaced and what it costs. It's $2,200. It'll take me X amount of time to pull the permit, get it replaced, and do that. So you have all the knowledge. All of this might cost $400 to get this done, but it's worth the money to do that, because now you know exactly where you stand and what the costs are, so you can now go and negotiate in your purchase price. If we need to go back and we go, hey, there's $8,000 more we didn't expect, that was not expected to have to be spent. So now we have some negotiating with hard facts to be able to go, not opinions. And that's important to understand. We need hard fact data, not opinions, when we talk about negotiation. All right. So I think that's it. Take a look. Obviously, you got my phone number there. You got my email address. And I look forward to having a conversation with you, getting you set up. We can get you going with the perfect home finder, if that's the thing. I'll get you connected to our lenders. We'll get the ball started for you, and we'll devise a timeline that's going to work. Hope you have a terrific day.